All right. Here's a highlight of webinar I did, just one slide. After you buy it, you're a seller. It's by far the phrase that when people hear come to Edge Trading Group because of it, because they never thought of it that way. What does it mean? After you buy it, you're a seller. Well, first of all, you have to know and have to agree that why does a price go up rapidly? What's the answer? More buyers, probably more desperate buyers. That has to make sense. There's got to be more buyers for the price of anything to go up. And not just buyers who are getting filled, but buyers who are not getting filled and they still want to buy it. All right. So more desperate buyers. Now, there's two ways, two things that people are looking to do when they buy it. First is buyers to look are looking to open a long position or close a short position. Cover and close mean the same thing. So they're either looking to open a position long or close a position that was short. So you're getting into a position or out of a position. So far, so good. Two ways, two reasons why people might want to buy it. Now, if there's buyers that make price go up and there's the desperation, which there is if prices are spiking up, it leads to a chase. And I think this word chase is relatable to anybody who's traded for 5 minutes or 5 years. You chase to get in long and then you get it and it goes down. You're trying to get out of your short and you're chasing it and your loss is bigger than you originally intended, right? But the bottom line is you get this kind of um, dynamic playing out. Buyer comes in, doesn't get filled. Buyer comes in, doesn't get filled. Buyers come in, don't get filled. Buyers come in, don't get filled. Chasing price up, right? And then they do get filled and they're long. Do you see what just happened after you seen the word long? Let me back it up. Watch. What happened? Look in the upper right. Let me do it again. Look in the upper right. Look in the upper right. A long gets open and a sell order goes above. How many people put a sell order above either automatically or manually after you get long? Everybody will raise their hand. Look what also happened below. Sometimes when people get long, look at that. A buy order below gets canceled. Sometimes because they originally tried to buy it here and missed it. So when they reached and bought it here, they'll cancel an order below. So sometimes you'll see less buying below when that long position's finally opened. So you're always going to get a sell order at some point, and sometimes you get a less buy order. So then same things are happening here. Long sell order, long sell order, long sell order. More longs, more sell orders, right? Now what? So that covers this buyers looking to open a long. When they finally rally and they finally get long, they're putting in sell orders and it could create the pressure for what? The downside, but we're not done because more sellers is what this created. Longs that Chase finally got filled created the more seller part of the equation. If you have less buyers, now you really could slide lower faster. Well, how do you get less buyers, Anthony? Buy stops being elected. Buy stops being elected. Buy stops being elected. Why do most people use a buy stop? To cover a short position and generally for a loser. That covers this. Buyers looking to cover a short. What happens every time a buy stop gets triggered? If you look, a buy order below gets pulled, doesn't it? Stop gets triggered, a buy order below gets pulled. Stop gets triggered, a buy order below gets pulled. You guys know this because it happens. Most people watching this, when they trade and their buy stop gets filled, it cancels a buy order below called an OCO, order cancel order. Either you do it manually or it's done automatically. As soon as you get out of a short for a loser, cancels your buy order below because you don't want to be buying it below anymore. You already bought it up here. So that creates less buyers. What we have when this dynamic plays out and long positions finally chase it and get filled, the sellers are up here, and then you get a series of buy stops with which did what? Puked shorts. Puke is synonymous for from the slang word from the floor back in the trading floor days for someone exiting a position. In this case, a short position. What happens now? It makes it easier for the sell orders to fill and price to go down. So if we were to draw it like a chart, the buy orders get us to go up, creates this dynamic of opening long positions and triggering buy stops. More sellers, less buyers, price goes down. That's why a top is a top. That's the dynamic that if you work towards creating the tools, become the sweet spot for entry. I don't care. It's not why you're bearish nearly as much as when you're bearish. It's not about how to get short. It's when to get short. This has to be, and I've been saying this for a long time, back of your hand stuff. If this isn't a major part of your analysis, then your analysis is a lot of wasted time. Whatever analysis you're doing, if this isn't a major part of it, you're going down a path that is wasting a ton of time. So this is where all the juice is. This is the whole shooting match right here. Let me add something because people watching this are pretty. Let me add one thing. What am I going to add? Let me add one thing on this other slide. And all this is the same. All right. Buy orders come in. You open up a long position. Now I added something. Watch what I added. A sell order above and a sell stop below. Let me do that again. When a long gets open, a sell order goes in above and a sell stop goes in below, doesn't it? Tell me every time you get long, you don't have these two subsequent orders going in. Either you have it done automatically or you do it yourself. And generally, you're connecting them, aren't you? So when one gets filled, this one gets filled here, this one gets canceled. If this one gets filled, this one gets canceled, correct? So think about that. Every time a long position's opened, a sell order goes in and a sell stop goes in. A sell order goes in and a sell stop goes in. If there's a lot of resting sells above and a lot of sell stops below, you are going to have a high likelihood that the next direction is downside. And you could determine that up here instead of having to wait down in here. So everything you do, as we're at the beginning of 2021, everything you have to do now, you promise yourself that this year, everything you learn has to have this as the beginning, middle, and almost the end in all the analysis that you do. Good luck. Stay safe.